What a wild ride we had for the silver market today as opposing forces pushed and pulled on silver's price, and it's likely not over yet. I'll explain why and how this happened as we explore. What a crazy roller coaster trip that we had today with silver's price. In fact, as I record this video, moments before the markets close, it is down over 2%, 2.17% now, hovering around $22.22 as I record this video. But what I want to talk about is the highs and lows for silver's movement today. Because if you look at a chart, it rocketed up dramatically. Well over 2%, well about 2.5%. In fact, it got up to $23.64 earlier in the day. And then it just plunged dramatically. That was an over 5.5% drop in silver. So what was silver's high today? $23.64. And it got down as low as $22.07. It is flirting very closely to what I thought was going to be the low in the summer, and how here we are in the fall, and it may not be over yet. It's interesting and fascinating how quickly things can change. I'm going to be reporting from a couple of different sources here on the movements of the price. But you know, one thing we can be rest assured of is that there is always a bottom. In other words, silver and gold will never go to zero. And of course, right now that sounds fairly ridiculous to even say that, because most stocks will never go to zero either, but some have. And that's just it. Some have dissolved and gone away. But what is it about gold and silver that keeps us coming back for more? Well, it's the attributes that sell themselves with these metals. And right now, silver really does need to sell itself to become that hedge against economic instability and inflation. But right now, we don't see it as being the market being or the economy being unstable. For some reason, that's not how the markets are viewing the economy right now. But we know that there is cracks in the economy, and there's a lot of signs out there that things are probably going to get worse down the road. And it's likely going to be next year and heading into 2025 by the most conservative estimates. I think at the very least, we're going to probably see some sort of a recession. But nonetheless, stay tuned, because I'm going to be talking about another video that I posted earlier in the day that provides a little bit of hope, a glimmer of hope of when things are going to turn around for silver. Silver prices have tumbled, according to FX Street here, from a late week peak on Friday's trading, skidding now into the low 22s after falling over 5.5% over the course of U.S. trading. And this is from the whipsaw action that we saw, opposing forces moving the price. Now, obviously, another thing that could be said is it's a manipulative factor. What's going on here? Why would it just skyrocket and then be shot down? Is there some sort of suppression action happening here on the markets? And isn't that supposed to be illegal to be occurring? I don't know. But you read into it what you will, because if you look at the chart, I mean, it is blatant and glaring how quickly this thing dropped. Is this an evidence for price suppression by the big banks as it just plunged here today? I don't know. This is probably one of the biggest and dramatic moves I've seen in a single day in a long time. And I've been watching these markets for quite a while. And so it's been a long while since we've seen any kind of activity like this. But the dollar is back into familiar lows that silver has cycled into the most of the year, driven up by a resurgence of the dollar index, bidding as global markets routinely pivot on fears of impending economic slowdown that could roll into a full-blown hard landing if left unchecked. And silver prices have consistently waffled on the top end ever since slipping from 2023's early peak above $26 an ounce. Boy, that seems like so far away right now. A highest set back in May. And of course, my prediction is that we're going to see $28 silver by the end of the year. That's looking less and less likely as we roll through here. But that's what's happening. But there were some numbers released earlier today. We've got that is weighing in on the sentiment here. The dollar index is up. Now, this is a report from Kitco, from Neil Christensen. The rally in the dollar and higher U.S. bond yields have proven too much for the gold and silver market as prices look to end the week at a 6.5-month low. And there could be more weakness to come as the U.S. Central Bank maintains its restrictive monetary policy for the foreseeable future. It is a trifecta of weakness for gold as the precious metal sees lower prices for the month, the quarter, and now the week. December gold futures last traded up at $1865.40 an ounce, down roughly 4% from last Friday. Gold is seeing its worst week since June of 2021. At the same time, gold is seeing its worst monthly losses since February, which represents the low for the year. In the last 3 months, gold prices have lost 3.3%. And actually, I'm a little bit shocked that gold would fall as much as it has, but it did. It's been holding up fairly well, but investors are now coming into grips with the fact that the Fed is not going to lower interest rates anytime soon. Higher rates are here to stay because of this. Gold got smacked, according to Kevin Grady, president of Phoenix Futures and Options. But the thing is, by extension, silver is reacting to this. But what gets me here is that we've known this for quite a while. A lot of these are kind of baked in. Is this an overreaction? Is this a psychological impact? Some of this, I read earlier in the day, was blamed on technical factors as well, too, which very well could be the case, but I really don't see how that can play a role here, but you never know. But nonetheless, that's where it is. Bears are clearly in a position of power, with the path of least resistance pointing south. The relative strength index on the daily charts is signaling that prices are heavily oversold, suggesting a potential pullback down the road, which means that this may not be over. Looking at the technical picture, a break down below 1857 may open up a path towards 1830. And right now we are closer to that because it's at 1847, right as I record this video. Should prices happen to push back above 1857, this could trigger an incline towards 1885. There is another analyst here that said that he's watching for support of 1800. And while Wednesday's move in gold that we saw that it popped back up there was impressive, history suggests it's unlikely to be the final leg of the decline. The case of the previous death cross in July 2022 is very similar to the current one. So we're basically at the mercy of the death cross, and by extension is holding on. It's having an effect on silver too. And so along with major economic data that we've seen come through here, we'll receive employment data next week for August. Investors will have to navigate a government shutdown as last-minute efforts to fund the government have failed. And you would think that would boost gold and silver, but it's not. Earlier in the week, rating agency Moody's said that the government shutdown, as Congress has been unable to pass any funding bills, could threaten the nation's sovereign debt rating. A shutdown could be a negative for the U.S. sovereign, Moody's said in the report. In particular, it would demonstrate the significant constraints that intensifying political polarization put on fiscal policy makings at a time of declining fiscal strength, driven by widening fiscal deficits. And that could be carving out a base. Now, as we look through here, we're likely probably going to see things kind of move in a south direction as the more and more time moves, especially with this new $33 trillion debt number we have to digest. When really, how do you digest when you're talking about trillions of dollars added up like that? It's not going to be long before we see 45 trillion. And it's just going to just snowball into this debt-based system that we're in, into the massive degree where, the only way out of it is to mint a $100 trillion coin. Of course, I've talked about that multiple times too, but likely not going to happen at this point, because nobody really cares. But we know that gold and silver, indeed, making their moves, provides a good buying opportunity right now. Now there's less demand for the precious metals, and likely this is not going to hurt them in terms of their reputation. But you know what? The reputation for gold and silver are the history as the guide, the long course of history. I did a shorts video not long ago explaining silver, and even where it is right now, it's still holding on and hanging on over the long course of time. It's a long-term proposition, and it's something that we should consider when having and holding silver. And even if you don't feel comfortable buying, if you think it's going to go lower, then, hold on to the silver you have. Because no matter what, if you bought silver at $28 an ounce, or $30 an ounce, or $40 an ounce if it's a silver eagle, in due course, it will come back, and you will be able to realize that it has held its own in terms of inflation. It may take a year or 2 years, depending on what kind of premium you paid on it and what inflation rates are going to be at that time. But nonetheless, I believe there will be a turnaround, and it will probably happen pretty soon. I posted a video earlier today that you should check out as to silver's recovery and when it will recover. I will post a link at the end screen of this video, so I hope you will check that out. Hope you found this video informative, insightful, and educational. I'd like to extend a multitude of gratitude to you all for watching and encourage you to please rate, share, comment, and subscribe.